What is going on, Ape Nation? So Matt Kors has been pretty busy lately. He's got interviews with Melissa Lee, interviews with Charles Payne, all in one day. I wish I was that lucky, but you know what? I'm not blessed like that. But who wants all that fame and, all that stuff that's not really necessary in order to live a happy, ape-full life, Anyhow, we are going to get right into this video. In this video, you're going to see Melissa Lee interviewing Matt. She does ask a couple of tough questions, but I think Matt does a pretty decent job answering them. And you know what? Matt, so polite, so well-spoken. Yeah, he's a decent representative for the apes, if I do say so myself. So we're going to get right into that video, but before we do, I'm going to have to ask you to go ahead and smash that like button so that the YouTube algorithm shares this video with as many people as possible, because you know what happens then? Well, it pisses Ken Griffin off, and if you like pissing Ken Griffin off, you're going to need to smash that thumbs up button. And for the love of God, if you're not subscribed yet, what in the hell are you waiting for? I drop content just like this every single freaking day. I drop like 4 videos a day now, guys. Come on. Give me a break. Smash that like button and subscribe. And tap that notification bell so you're never left out in the dust. But anyhow, enough of that. Let's go ahead and get into this video.
Back to Fast Money. Check out shares of AMC rebounding after Monday's 15% plunge. Today's comeback came on some absolutely blockbuster trading volume. Check this out. AMC traded more than 106 million shares today. That's more than Tesla, Facebook, and NVIDIA combined. Our next guest is all in on this trade. He's an AMC investor who often talks about this stock on his YouTube channel, which has more than 372,000 subscribers. Welcome back, Matt Kors. Good to see you.
Happy to be here. Great to see you.
What is the mentality? What is the sentiment at this point, this far into the trade, having seen some pretty steep declines? Because as we go into the end of the year, there's concern with just the macro environment hitting high-flying stocks, especially the meme stocks, and a lot of new traders have never traded in this sort of environment before, haven't seen these, stocks move in integers down.
Yeah, I think you actually hit the nail on the head right there with, I think the prevailing winds are more concerns from the bigger players, the whales, institutions, hedge funds, and other things related to that, of being very, very cautious with this upcoming Fed meeting, being very cautious with a multi-decade high inflation rate. So I think you're seeing from the larger players a pivot out of some of what would be best be described as a high-risk bet. In terms of the apes, the retail traders, I think many people are still strongly holding on to this entire concept of diamond handing, because this play, this particular one, AMC GME, it's much more symbolic of the fight for market transparency and fairness. Yes, we can chop up all these other trades, look at their revenues, their EBITDA, all that great stuff. But these two particularly, I would actually define it on the retail side as some of the easiest trades, because the people involved in it, they buy and they're waiting, and many, many people, and this might just be anecdotal, are willing to ride it all the way down to zero if need be.
Which sounds good, on paper, but when you have a lot of people who on the way up were so glad about it going up, being able to pay off their mortgages, et cetera, some life-changing amounts of money being made, that's hard to swallow. And so, Matt, when we take a look at the trading volume, and we highlighted today's trading volume being 100 million, its 30-day average is 41 million. Facebook, or Meta's 30-day average, is 21 million. So it's twice that of even Meta on just an average day out there. You're saying basically that all of that other trading activity, that's just people, other investors trading around, but the retail trader is holding on still?
I would strongly think that the data actually suggests that. I think with the high volatility, as we both know, there's going to be quite a bit of action between market makers and high frequency traders, because whenever there's high volatility, of course, and we're also comparing it to stocks that are numerically more valuable, so it's easier to trade, obviously more volume in a stock that's priced at a lesser volume, a lesser price in general relative to AMC. But I think with it, it's just the high volatility. There's going to be a lot of high frequency trading. There's going to be a lot of market makers. Yes, there is a lot of excitement in retail, but I think there's also some bigger players who are highly attached to this particular play.
You mentioned before that a lot of holders of AMC are believers in this notion that you can enact market change. Payment for order flow is one big issue, of course, that this community says should be solved, should go away. And I'm wondering, if you are an AMC diamond hander, should the pair trade be short Robinhood? which, by the way, saw its lowest level in today's session?
That's an excellent question. So overall with the apes, I think there's people who have their favorite equities. And I think a core pillar of being an ape is still really, really caring about market transparency. And that might not even be tied to a particular equity. But talking about Robinhood, I've said this publicly before, I have 3 words for you. I am bearish, bearish, bearish. If we dive into the fundamentals of what's going on with Robinhood, the last quarter, I believe they burned $1.3 billion. The quarter before that, they burned $500 million. It's safe to say that it's not a good situation there. The only reason previously before that they did well was kind of these idiosyncratic events such as the explosion in Dogecoin, the explosion in GameStop, where they profited off of payment for order flow. But now in the previous quarter, we didn't have one of those wild events. They didn't really jump onto the Shiba train, so they weren't able to profit off of that. And now if we move this forward, when they're making money off of crypto and that's getting a little bit more quiet and off payment for order flow, which it really sounds like in the next calendar year, there's going to be fireworks on the regulatory front that very much relates to this. Their business model is very quickly falling apart. So that's a quick fundamental breakdown. But on more of the social standpoint, I think one of the most difficult jobs of the year was to be on the PR team of Robinhood. It was a dumpster fire. The retail public very much lost their faith in the company, and I don't blame them. In the company's prospectus, they said a risk to them is a reduction in spreads between bid and ask. That is a risk to the company, which is something beneficial to traders. That's right in their own SEC filing. So I just don't see a way in which they can win the trust of the retail public back.
Matt, good to see you. Thanks for your time.
Thank you so much.